we are going to start is chapter number 8, which is bank reconciliation statement. So I want both of you to put this heading on your notebook, bank reconciliation statement, and we'll wait for 2 more minutes so that other student could also join, and then we will start. We will continue with the session. Or probably Jana will also join. So please wait for 2 minutes, but put this heading on your notebook.
Yes.
We'll continue this in just 2 minutes. All right, Laviba and Ganesh, let's continue the session. So, as I said, we'll be talking about a new chapter today, which is bank reconciliation statement. And as usual, we'll first of all talk about the meaning of the bank reconciliation statement. So, I want to start writing. First of all, we'll cover the meaning of the reconciliation statement. We'll try to understand what is actually a bank reconciliation statement is. Then we will learn about how do we actually prepare bank reconciliation statement, and also learn about the purpose of preparing the bank reconciliation statement. Okay, so if I need to define or if I need to explain what is bank reconciliation statement, I can define it as, write this down in your notebooks. Bank reconciliation statement All right. So if I need to define the bank reconciliation statement, we can do that like this: bank reconciliation statement, which is also called BRS in short. BRS stands for Bank Reconciliation Statement. This is a statement prepared by the account holder, or you can say it is prepared by the business on a particular date to reconcile, which is to correct the difference arising in the bank statement, which is passbook, and the cash. So to correct the differences arising in the balance appearing in the passbook and cash book, to rectify that difference or the mistake, we need to reconcile the cash book and passbook. For that purpose, we prepare the bank reconciliation statement. Now, in order to understand what is actually a reconciliation statement is and what purpose it serves to the business, you will have to first of all understand how how basically a business operate, or uh, how any transactions are recorded in the cash book and the passbook. Or before that, in fact, you will have to understand who actually prepare the cash book and the passbook. So, as I said, see, let me tell you this one more time. No need to write this down. Just tell me if you have written down the definition, both of you. Tell me if both of you have written down the definition. Okay, so
Yes, sir.
Labiba, okay, Ganesh. So, all okay. So let's understand. As I said, bank reconciliation statement, also called BRS. Purpose, you don't have to write this down. Purpose of preparing the bank reconciliation statement is to reconcile. Reconcile, sir, what do you mean by reconcile? Reconcile basically means to correct the differences. All right. It is prepared to reconcile what? It is prepared to reconcile the cash book and the passbook. Cash book and the passbook. So what do you mean by reconcile? See, what happens is sometimes, because passbook is maintained by who maintains the passbook? Passbook is maintained by the bank. Bank maintains the passbook, yes or no? And cash book maintained by the business. You understand that? Business maintains account in the
Yes, sir.
bank, and bank maintains passbook to record the inflow and outflow of cash. And similarly, whatever transactions taking place, owing to which cash is flowing into the business or going out of the business, such transactions are also recorded by the business in the cash. So basically, transactions are recorded in the passbook and the cash book as well. But in the cash book is maintained by the business, passbook is maintained by the bank. Now, what happens sometimes? Certain transactions sometimes what happens? Transactions sometimes recorded in the cash book, but it is not recorded in the passbook. Or it may also happen vice versa, that certain transactions are recorded by the accountant of the bank, which is basically it is recorded in the passbook, but we forgot to record that in the cash. Since transactions are not being recorded in both the books, so at the end of the month, when you will track the balance of the cash book and the passbook, you will find that there are differences arising. Let's suppose, for the time being, let me give an example. Let's suppose all the transactions taking place in a month have been recorded in the cash book as well as in the passbook accurately. All the transactions which are needed to be recorded in the cash book, which are needed to be recorded in the passbook, all transactions have been recorded correctly. So in that case, when you will tally the account at the end of the month, you will find that both passbook and cash book is showing you the same balance. Let's suppose as for cash book, there is a balance of rupees 5 lakh. So you will notice that if all the transactions are recorded correctly in the passbook, you will find that passbook will also give you the same amount of balance. So in that case, no reconciliation is required because passbook and cash book is indicating the same balance. But the problem is, sometimes, as I said, there are certain transactions which are recorded in the cash book, but we forgot to record the same transaction in the cash book. Let's suppose for the time being that there was a transaction of rupees 1 lakh which needed to be recorded. But what happened that we recorded this transaction in the cash book, but we forgot to record this transaction in the passbook. So at the end of the month, when we will tally both the balances as per passbook and as per cash book, we'll find that balance as per cash book will indicate a balance of, let's assume 6 lakh, assuming 5 lakh plus 1 lakh equals to 6 lakh. But at the same time, when you will tally the balance as per passbook, since this transaction is not recorded here, that simply means passbook will still show you the same amount of balance which was in the previous month, that is 5 lakh. Got it? Now see, because there is a difference arising in the passbook, in the balance reflected by the passbook and the cash book are different. So we need to rectify the problem. We need to identify why passbook is not matching with the cash book, and accordingly we need to correct the passbook or the cash book depending upon wherever we find the discrepancy. Similarly, sometimes what may also happen that certain transaction might be recorded in the, let's suppose it gets recorded in the passbook, but we forgot to record the same transaction in the cash book. Let's suppose there was a transaction of rupees 2 lakh, which we need to record in both the books, but bank have recorded it in the passbook, but we forgot to record here in the cash book. So this will eventually cause a difference at the end of the month. So you will find that at the end of the month, we will have a cash balance as per cash book will be 5 lakh and balance as per passbook will be 7 lakh. I hope the thing is clear at this till this point. Everybody, is it clear? Is it clear that cash book and passbook, there may be a situation that cash book and passbook might not tally at the end of the month, and because cash book and passbook does not tally, then in order to rectify the problem, we'll have to prepare a statement which is called bank reconciliation statement. Is it clear, everyone? Please confirm.
Yes, sir.
All of you, please tell me so that we can proceed to the next part of this topic. Understood, all of you? Shall we move to the next part?
Sir, could you explain it once again?
Oh, all right. Who was that? It was Labiba. Could you explain it again?
Sir.
Risha. So, Nisha, what I'm saying, that bank reconciliation is a statement is there to reconcile cash book and passbook. In order to understand the bank reconciliation statement, you will have to understand first why there is a need to reconcile the cash book and the passbook. Why there is a need to correct the passbook and cash book. Because see, you have to ensure at the end of the month you need to ensure that balance as per passbook and balance as per cash book are same. If the balance as per cash book and balance as per passbook is not same, that simply means that it requires some adjustment, it requires some reconciliation, it requires some rectification. Got it? So what I'm saying is that there might be situation wherein certain transactions which are needed to be recorded in the cash book might not be recorded in the cash book, but properly recorded in the passbook. We forgot to record that in the cash book, but we accurately recorded that in the passbook. So if a transaction is recorded in the passbook but not recorded in the cash book, this is eventually going to cause a difference at the end of the month in the cash book and the passbook, right? either the passbook is going to reflect a higher value or cash book is going to reflect a higher value, right? Similarly, there are situations where an certain transaction might be recorded in the cash book only, but we did not, or the bank did not recorded that or reflected that in the passbook. So this will eventually cause a difference in the cash book and the passbook again at the end of the month. So the purpose of bank reconciliation statement is to rectify the errors or reconcile the cash book and passbook after identifying the problem because of which cash book and passbook is not matching. I hope this is clear now. Is it?
Yes, sir.
So to understand it a little more in a better way, I have taken an example. So let's just understand. Let's suppose this person is accountant of XYZ Limited. This means this is an accountant of the business, and here he is accountant of the bank. So he's a bank accountant and he's the accountant of the XYZ Limited. Now what happens? This accountant of XYZ Limited, he maintains double column cash book of the business, wherein he record all the cash related and bank related transaction in the double column cash book, right? So wherein inflow and outflow of cash as well as bank is being recorded. You already know the how the double column cash book works, right? All of you. Everybody knows that
Yes,
how
sir.
double column cash book works. Huh? We already covered a topic relating to the cash book. Now, if we talk about the bank accountant, he also record the transaction, but he maintains a separate book which is called passbook. Got it? He also keep a record of the bank balance of XYZ Limited. But for that purpose, he prepares the party's bank statement, which is also called passbook. I hope this is clear, everybody. Is it clear until this point?
Yes, sir.
Okay. Now what happens that at the end of the month, he calculate bank balance as per cash book. Who calculate bank balance as per cash book? Obviously, the bank accountant of the XYZ Limited will be totaling the balance at the end of the month as per cash book. On the other hand, bank accountant will be totaling the balance or calculating the final value at the end of the month, considering the party's bank statement. So that basically means that bank accountant will consider passbook or the bank statement to calculate the balance of the party at the end of the month. Similarly, accountant of XYZ Limited will be considering the cash book to find out the balance of cash in bank at the end of the month. Right. Now, at the end of the month, when they actually calculate the balancing figures as per cash book, and accountant of the bank will be finding out the balancing figure as per the bank statement, on that date, there may arise a difference, right? But there may arise a difference in the balance as per cash book and bank statement. And to rectify and in order to settle these differences, bank reconciliation statement is prepared. Is it clear, everybody? Now it is, I guess it is more clear to you. Tell me if it is still not clear. The meaning of the bank reconciliation statement we already did. We
Yes.
also understand how it actually works, why there is a need to prepare the bank reconciliation statement. I hope this is clear, so that please confirm, everyone, so that we can move to the next slide.
Yes, sir. Yes, it's clear.
It is clear, okay. All right, then moving on to the next point, let's take few example to understand how actually difference may arise at the end of the month. So let's also okay, let's understand this through the following examples. So let's suppose there was a check issued by the business, but not presented for the payment in the bank, and the amount of check was rupees 80,000. All right. Now, when we issued this check to the party, to one of our, you can say, let's suppose we have issued this check to our supplier. All right. So on that date, the balance as per balance as per cash book was 5 lakh, and balance as per passbook was also 5 lakh. Got it. on that day, on the date on which we issued the check to the party or to our supplier, on that date, cash balance and bank's balance was 5 lakh. Let me explain this here. So balance as per cash book was 5 lakh before the issue of such check of that. On the other hand, balance as per passbook was also same. Everything was fine until we issued that. Now what happened? That business have issued, let's suppose business have issued one check to some supplier. Value of this check was how much? The value of this check was 80,000. Now see, this is very, very important. Now see, since this check has been issued by the business, you can assume it like that the accountant of the business have issued this check to one of the supplier. So to receive the payment against this check, supplier need to present this check to the bank. Yes or no? Supplier will be required to present this check to the bank, and only then he will be able to collect this amount from the bank. Yes or no? He will present this check. This check will be
Yes,
presented
sir.
to bank, and bank will be paying him against the check. Now the thing is that what happened? We issued this check to this party to the supplier, but he did not submit or deposited this with the bank. Alright, but that means as soon as the check has been issued by the business, or as soon as this check has been issued by the accountant of the business, this transaction must have been recorded in the cash book. Yes or no? We must have recorded this in our books of account. Yes or no? They must have reduced our bank balance by 80,000. Yes or no? As soon as we have issued this check, presuming that the party will obviously present this into to the bank, and they will definitely encash the check from the bank. So considering that or thinking that, we must have recorded this in our cash book and subtracted the bank balance by 80,000. Right, everybody? Is that clear? Tell me, everyone, is this clear? Yes or no?
You can explain
Tell
it
me
again.
if you want me to explain it again.
Yes.
Tell me if anybody wants me to explain this point again.
So I wanted to explain again.
Okay. See what I'm saying. That let's suppose this is Mr. X is the accountant of the business. He is the person who maintains the cash book for the business. Let's take it this way. Now what happens? He issued a check to the supplier valuing 8,000. So tell me, as soon as this check has been issued to supplier, this transaction must have been recorded by Mr. X in the cash book, yes or no? Whether he have recorded this in the cash book or not. He must have recorded this in the cash book or not.
He must have recorded.
Yes, he must have recorded this in the cash book. He must have recorded this in the cash book. But what happens? This cash is not presented to the bank. Because the check is not presented to the bank, tell me whether bank have any idea whether the check is issued to the customer, to the supplier or not. Whether bank have any idea that check has been issued to some supplier, and whether bank accountant, let's suppose accountant of the bank is Y. Let's suppose whether this transaction have been recorded in the bank passbook, yes or no. Whether bank have recorded this in the bank statement, yes or no. Answer is no. Since the check is not presented to the bank. Bank have no idea about the issuance of the check. Everybody understood this point?
Yes, sir.
Is it?
Yes,
Now
sir.
see, since the check has been issued by the accountant of the business, and this must have been already recorded in the cash book, but the same check is not presented by the party to the bank, hence bank have no idea about the check being issued. What happened that because this transaction must have been recorded by the bank by the business must have reduced the bank balance by 80,000. But the same transaction, because bank have no idea about this, so bank must have not recorded this in the as or in the bank statement. So there is no change in the balance as per passbook. So at the end of the month, balance reflected by the passbook will remain 5 lakh. Is that correct? But balance as per cash book will be 80,000. Is that clear? Sorry, 4,20,000. Is that clear? Since the transaction have been recorded in the must have been recorded in the cash book, so cash book will reduce by 80,000. But on the other hand, transaction haven't been recorded on the in the passbook, so therefore passbook will be reflecting the same balance as was reflecting previously. So there is a difference arising, yes or no? Everybody understood this point, yes or no? You understood the reason why difference may arise? Everyone, please tell me if it is clear, yes or no.
Yes, sir.
Okay,
Yes,
now
sir.
see, that is what I was trying to explain in the PowerPoint as well. The check issued but not presented for the payment in the bank is 80,000. That means if cash balance and bank balance previously for the issuance of such check was 5 lakh, after the issue of check, cash balance will reduce definitely. See what is written here. It says bank column of cash book must have been decreased. That means credited by the value of the check issued. But on the other hand, because not check is not presented for the payment, has no effect in the bank statement or passbook. So this eventually means bank balance as per cash will be 4,20,000, but balance will as per passbook will remain 5 lakh. Hope this point clear, everybody. Is it clear? Yes or no?
Yes, sir.
Okay. So since you already wrote the difference, sorry, you already wrote the meaning of the bank reconciliation statement, I want you to note this down as well. Please note this down. However, this is an example. This kind of question cannot be asked in your exam. But to understand the concept of the chapter, you should write down this example itself. Please note this down quickly. Let me know as soon as you are done. Then we'll move to another example. We'll take few examples just to make the things clear, and then only we will start understanding how and why. Sorry, how do we actually prepare the bank reconciliation statement? How do we actually rectify the differences arising in the cash book or the past? But before that, we need to cover so many examples. We need to understand why difference may arise through examples. Please note this down as soon as you are done. me guys, once you are done, so that we can move to the next example. Everybody, everyone still writing it?
Yes, sir.
Then everybody,
Yes, sir.
why you guys not responding? Everyone, whether you have done it or not, so shall we move to the next slide, please?
Yes, sir, we are done.
Try to just tell me as soon as you're done. Don't wait for me to ask.
Sir, I just finished.
Oh, all right. So moving on to the next example. Please write this down as well. Reason two could be because of which the bank statement and the cash book is not matching. The reason could also be that check received and recorded in the cash book but not yet deposited. Please write this example. I'll try to explain how or why the passbook and the cash book might not tally. This is the reason to which may cause difference in the passbook and the cash. Okay, now see, if check is received and recorded in the cash book but not yet deposited, see what happens now sometimes business receive check as a payment from one of their customer, and as soon as the check is received by the business as a payment, accountant of the business tends to record the value of the check in the cash book. So as soon as the check is received, accountant of the business usually record that transaction, record that in the cash book, right? But since the check is not yet deposited into the bank, that means bank will not bank must have not recorded this in the passbook, since bank do not have any idea about the check that you have received. So what happens, as soon as we receive the check, we record this in the cash book. On the basically we increase the bank balance as per cash book. But since the same check is not recorded in the passbook, or the bank did not do not have any idea about the receipt of this check, but what bank do? Bank will know. Bank do not do anything. Bank basically does not recorded. Bank haven't recorded this in the passbook. That simply means that at the end of the month, when will tally the cash book with the passbook, you will find that the cash book will have the higher balance comparing with the passbook. Since the check, one of the check which is received has been recorded in the cash book, but the same value is not yet reflected in the passbook. So at the end of the month, you will be having a higher cash book value comparing with the passbook value. Everybody, please tell me if this point is clear. Tell me if it is clear, guys. Please confirm.
Yes, sir.
Yes, sir, it's clear.
Okay, now see, assuming that let's suppose at the starting of the month, both the bank balance and the cash book bank's passbook balance and the cash book balance both are same. But during the month, what happens? We have received a check. So as soon as the check has been received, bank column of the cash book must have been increased. That means debited by the value of the check received. On the other hand, but because the check is not yet deposited, hence no effect in the bank statement or passbook will take place. Eventually, at the end of the month, bank balance as per cash book will be reflecting 5,40,000, right? Balance as per cash book will be 5,40,000 because we have added 40,000 in it. On the other hand, bank passbook will still be reflecting you the same amount of balance, which is 5 lakh. And this is the cause of difference, which requires us to prepare the bank reconciliation statement. All right, please note this down quickly. Guys, please note it down. And just tell me as soon as you are done writing this. Done, all of you.
No, sir.
Done, everybody else. No.
Sir, and then.
Done, sir.
Okay, all right. So let's just quickly cover one more example, considering why difference may arise between the passbook and the cash book. And if time allows, we'll cover other examples as well. But for now, let's move to the third example. Third reason, you would say. Third reason could be bank charges, rupees 1,500 charged by the bank. What happens sometimes that if you see, bank offers different kind of account. Let's suppose if you are a business and you have opened an account with a bank, so mostly a business opens a current account with a bank. All right, so we have three types of account that we usually maintain with the bank. There is saving account, there is fixed deposit account, and then there is a current account. You might have heard of these different types of account. So current account, fixed deposit account, and saving account. But what happens when it comes to the business? Business usually maintains the current account with the bank, and since business maintains the current account, sometimes bank deducts some charges. Not sometime, but mostly in case of current account, bank imposes some account maintenance charge upon the business. That is on annual basis is deducted by the bank from the customers balance available with the bank. So what happens when bank deduct some amount on account of bank charges? This charge, because it is deducted by the bank must have recorded this in the bank statement. This must have been recorded in the passbook by the bank, right? But because the bank charges is because regarding the bank because the deduction regarding the bank charges is not yet known to the accountant of the business. So that simply means that the same transaction must not be recorded in the must not have been recorded by the accountant of the business. Understand that bank charges deducted by the bank must have been recorded in the passbook because the bank itself have deducted that balance. So overall, the bank balance as per passbook must have been reduced by 1,500. Is that correct? But on the other hand, when it comes to the cash book, because cashier or the accountant of the business have no idea about the deduction made by the bank on account of bank charges. That means because accountant have no idea, so this event or this particular transaction must not be deducted, must not have been basically it is not deducted by the accountant, and hence it is not being reflected in the cash book. So what it means that cash book will indicate you the same balance as it was previously indicating at the beginning of the month. But on the other hand, when it comes to the passbook will be reflecting a different balance, probably 1500 less than the previous balance. All right, everybody, is that clear? Let's suppose the opening balance as per cash book was 5 lakh and bank statement or the passbook balance was 5 lakh. But as soon as this bank charges has been deducted by the bank, that this particular transaction have been duly recorded in the passbook, right? Due to the bank charges, bank balance will decrease by 1500. On the other hand, accountant did not record it in the cash book, therefore there will be no change in the cash book. So at the end of the month, the balance as per passbook will be reflecting you a balance of 4,98,500. On the other hand, cash book will be reflecting a same balance, which is 5 lakh. And this is leading to difference arising in the passbook balance and the cash book balance, which requires us to prepare the bank reconciliation statement. All right, everyone, is this clear, everybody? Tell me, Ritika, Labita,
Yes, sir.
Manisha.
Yes, sir.
Okay. Please note this down quickly, and because we don't have enough time that we can further discuss regarding the reasons of difference arising in the passbook and the cash book. So we'll cover the remaining points in the next class, and in the next class we'll probably learn about the formation or the preparation of the bank reconciliation statement as well. I'll be covering the questions based on the reconciliation statement as well. So this is it for today's session. I just wanted to note this down quickly, and as soon as you are done, you can leave the session. But before that, just note it down. And also, if you do not understand and if any point that we discuss in today's session, you can ask your doubt as well. But before that, just write this down quickly.
Sir, done.
All right. So those of you who have done it and written it, they can leave the session now. This is it that we'll be discussing. We will talk
Thank you,
about
sir.
this more in the next slide. So then take care. Goodbye.
Okay.
Thank you, sir.